means equity, means stock markets, means risks. There is a broad spectrum of mutual funds and a broad spectrum of risks and assets that are, that it can adhere to.
So I'm going to come to you, Raju. How does one begin investing in mutual funds? If ladies here want to go out, put their money into mutual funds, how do you start the process?
I would say for a beginner, the best thing, like in any field, be it that you want to learn cooking or dancing or anything, the first thing probably would be to look around you and seek help. That how can you start about it? So there could be somebody in your family or friend circle who's already experienced it. The next thing could be that all of us at least have a bank account somewhere. So you could visit your local bank and they would definitely have a mutual fund desk. So you could seek an appointment with the person sitting out there and try to understand. In addition to that, of course, there is a lot of information today available on your phones, on your laptops, through the internet, that you could do your own research. But I feel that whatever information is out there, it may end up confusing you because there is just too much of it. And women typically enjoy or are more comfortable when they get a human interaction. So someone personally who could, answer their questions. If you go to the internet, it is more of a one-way communication. There is a lot of information there, but you may have questions and that particular website or article may not answer that. Or it may actually give rise to more questions than answering them. So you can do a little bit of your research on your own, but the next step would be to get in touch with somebody who has a little bit of experience in this and get the first step. The simplest way to make a beginning is that you would all have some balances in your savings account, which are just lying there. So to experience that what a mutual fund is, you could probably start investing in a very, very simple basic scheme, which is a liquid fund, which is like a, let's say, negligible risk product, which will only give you a small return, but it is fairly safe. So it is not that even if you start with a 5,000 rupees, you know that even if you do not lose it in a liquid fund, but even if tomorrow you don't have it, you don't miss it. Okay, and that gives you confidence. So once you make an application in a liquid fund, you see the kind of response you get from a mutual fund. So you will get your account statement that gives comfort. Okay, my money is invested here. Then you can look at the NAV or the price, which tells you, okay, it is, increasing every day little by little. So that gives you the initial confidence. The second thing is that when you're looking at long-term investments, then you could want to start investing in some long-term instruments which are available or long-term asset classes which are available through the mutual fund. So it could be a combination of equity, debt, like Ritu mentioned. So the best thing, again, if you wish to start on your own, is that you look at a good diversified mutual fund, a good diversified equity fund, which has at least a 10-year track record. And you could discuss it with your person at a bank and see if they would also recommend that, and maybe start a small systematic investment every month into that kind of a scheme. So like all of us earn every month, we spend every month, we save every month, so why not invest every month? So make a small beginning in that way, and as you gain confidence, you can seek multiple sources from where you can get more information, more advice, and start in a bigger way. I think that was a long answer.
But Rita, I'd like you to first focus on why we need to make our money grow. Women are excellent savers. We all know how to stash our cash, any extra amount, any time of need. We all have a little kitty of our own. But I think what's important that women need to realize, money is not money kept in a bank or your savings account. You need to realize how to make your money grow and then treat yourself.
So, why do we invest our money? I think you would like to invest our money because right now you're earning. In future, you will retire. So you need to grow your money to meet up with your, the first and foremost is what are my requirements in next 10 years time frame, and I should actually plan my cash flow. I mean, investment comes later. First is, what is my cash flow requirement? Based on that only we should, start investing the money. So the investments are when, you're not able to earn because, we all, as you grow and you mature, you feel you have a limited, life in which you can earn the money. So idea is to ensure that we grow the money and we meet the cash flow objectives of a person, and then only the investment thesis and investments come up.
Not just that, I mean, Hina, I feel why should just money sit pretty in your bank account or the cash that you've stashed out? The need and the emphasis to make your money grow with that excess amount, deploy that money further. The power of compounding, I think, is what we need to, how can you make a 3 lakhs into, say, a 30 lakhs in 10 years?
Okay, so here is a goal for all of you today. You all have to reach that stage where your money is making money and you're working for the pleasure of it. Okay, and you've got to start early. Let me give you some statistics. If your household spend today 6 lakhs, 20 years hence at a 7.5% inflation, which is not that far-fetched for a growing economy like ours, you will need 25 lakhs, all right? So there is compounding happening on your expenses. You have to make sure that the compounding on your investments happens at a faster rate, right? And that's how you need to make it grow.
Okay, so I'm going to first take 1 or 2 questions from the audience here. If they would have any basic questions on why a mutual fund, how do you start going by it, or if you already are mutual fund investors and you feel like, oh, not mutual fund, why should I not invest in real estate or gold or equities? If equities is a fiery subject for you. Any questions from the audience here? Yes, go ahead, ma'am. I think yeah.
Thank you so much. I'm Hina Malhotra. While we're on the subject of mutual funds, and I happen to be in the right age group to be asking this question, are there any mutual funds that help us to plan for retirement and provide protection? Are there any mutual fund plans for protection?
Rita, you want to take that one? Okay, she's perhaps better equipped to handle out.
I don't know whether I'm able to handle that, but I'll attempt, most definitely. Retirement, really what anybody wants at the end when you are retiring is a nest egg that you should have built over a period of time, which should be able to take care of your
expenses and maintain the lifestyle that you today have. So that's really what you're looking for. And while mutual funds may not provide you a retirement, there are retirement solution schemes. There is the UTI Retirement Benefit Solutions Plan. So there are retirement solution schemes with a whole lot of mutual funds other than the UTI as well. But having said that, mutual funds as an entire basket, like I had mentioned earlier, mutual funds is a vehicle through which you can invest in various asset classes. You could build your own nest egg. So you invest over a period of time into various asset classes, and like Hina just mentioned in terms of how the compounding effect that investment can have. So you build your nest egg and then keep withdrawing from that, and that's how you can plan really in terms of your retirement solution without really having a pension that is coming to you. So there are 2 ways that you can do it. There are pension schemes, there are retirement benefit solution schemes where you can invest and post a certain period you start getting a return from that, or you can just build a nest egg through equities, through bonds and off mutual funds, and build a nest egg which gives you a certain return on a periodic basis the way that you would like it.
So let me add to that.
Sure, go ahead.
Firstly, retirement planning, we all need to begin as early as 20 or 30 as well. Okay, but having said that,
I was just going to come to that, but go ahead, finish your point.
So you have to start now.
It's never late, let me tell you
never
that.
too late, okay? Specifically, if in the mutual fund arena, retirement planning is still at a nascent stage, but there are about 4 fund houses today, which include Templeton, UTI, Tata, and I think Reliance, which are offering retirement plans. How they work is, like for example, a Templeton will give you a set plan which will give you about 65% equity, debt and 35% equity. You might want flexibility with that, right? Then you can opt for some other fund houses which have got parallel schemes running, which have got a variation of debt equity, in which depending on your age and your risk appetite, you can get into any one of them. And they allow you switches within the scheme, which is free of cost. Interestingly, it is also covered under 80C. So you can also avail of your tax benefit if by any chance you still have that available. Thirdly, what you also need to realize is mutual funds are after 3 years, okay, or after the lock-in period, when they start giving you out dividends, so you start withdrawing from them, as the tax rules stand today, they're going to be tax-free for you. So that's, in terms of compounding, in terms of taxation benefits, it's a good way to go in for your retirement plan.
Would you have a follow-up question? Go ahead. Yeah.
How do you find a reliable fund manager?
That's the
Very
most important and key
It's
question.
a very important question because we've all done it and burnt our fingers many, many times.
Can I just answer that exceedingly simplistically for you?
Yeah.
There may be lots of presentations. There is a plethora of information available on the net, like Raj's mentioned.
Very simplistically, I think, and I think women folk are exceedingly good at gut feel. I think exceedingly simplistically, somebody who you can communicate with in the most honest way, and who you can, will be on your side of the table when you're having a conversation. And I think, a whole lot of us know that by our gut more than because financial planning or investing is not a product which you can touch and feel and thereafter buy. It's an experience, and the proof of the pudding is in eating. So you really cannot know whether this is something that will work for me, this fund manager, this financial planner is somebody who will work for me or not, unless you experience it. So therefore, you should go by your gut and really see whether you can connect with the person, discuss everything out with the person, and then experience it. And trust me, the experience will be worth it.
Unfortunately, they don't stay at any one place long enough. They're always moving. So if you met the person 2-3 times, that's it. You're lucky. Otherwise, after the first meeting, you don't see the person.
But ma'am, the acumen of the man does not change wherever he goes. So yeah, you would like to add something, Rita.
As you have said, that fund managers do change, but I think most important is we should invest, we should find an institution, not go with one individual asset. So, when we manage large funds, what we focus is, it is not, we don't need not go with Rita Gupta, but we go with an institution which she is backing with, because then you get the right processes, right governance mechanisms, and specifically in the finance sector, there will always be ups and downs. So idea is how much risk I'm able to take if the market goes down. So so like gold, everybody started investing in gold, and like we were the ones, we said we can't be investing in the gold, and now suddenly the gold prices have crashed. So some people would have advised you, please continue investments in gold and create gold SIPs, etc. So I think nobody is bad as such, but there are certified financial planners who are available. So I think the first and foremost thing is go with an institution who have a track record. Then you'll not face these kind of issues.
I would also like to add what both Ritu and Rita mentioned, that when you're interacting with an investment advisor, it is not just their qualifications and experience and various certifications. It is also that you will understand, as women, we are, like she said, gut feel, that person should have the maturity to put herself or himself in your shoes and look at things from your point of view. So everybody has a different risk profile, and where you invest, whether anybody can create a financial plan for you. But ultimately, will you end up sticking with that financial plan for the rest of your life is a function of whether your own inherent risk profile was taken into account when that financial plan was made. Because, initially that advisor may themselves impose their own risk